Okay, well, patience in current market conditions. Just a quick background about myself. Remember, guys, I'm a long-term trend trader. Okay, I'm not a day trader. I'm not a scalper. I'm not a range trader. And one of the key aspects of being a trend trader, and actually in general being a successful trader, is patience. Money. We're so conditioned in the way that we make money that a lot of people bring this philosophy to trading, and that is we go to work, we work 9 to 5, or we get an hourly wage, or we have some kind of salary, and at the end of each month, we get paid a certain amount that we're expected. Maybe we get bonuses, etc., etc. Um, in trading, it's not like that. That's a very incorrect approach. It's because of that sort of philosophy and that conditioning that a lot of people turn to day trading and to a shorter term approach to then try and, if you like, replicate the money that they're making from their day job so that they don't need to go to a day job and they can then make their money from trading. That's a very common sort of attitude. And I can see why people do that. I can see the appeal of that. But when people sort of take that approach, they soon realize that it's not actually that simple. Not saying day trading can't work. I do sort of knock day trading a lot. People who follow me on Instagram, I generally sort of give day trading a bad name. And that's not because it doesn't work. It can work. It's just that it's not the best way, and it's actually not the most powerful way to make consistent money and consistent growth. Part and parcel of trading is to grow an account, not just, make a certain amount of money that can fund your lifestyle. What you want is to be able to grow an account exponentially so that you can then start having the finer things in life. And not only that, also having the time to enjoy that money. And I think that's one of the key aspects of trading that a lot of people don't really appreciate, which is the time element. Time is something that we can never get back. And that is one of the real advantages to trend trading, is that control over time that it will give you. Now, it's not instant. You're not going to become a trend trader overnight. It takes time. It's a journey, just like anything else. But at the same time, it doesn't have to take years and years and years to achieve that. Realistically, you can achieve that in 2, 3, 4, 5 years if you approach it in the correct way. And that is part and parcel of the message that I've put out on all my social media outlets, etc. So, so having said that, let's go in and let's do a little bit of an analysis and let's really look at what the markets are doing. Remember, again, a key trait is not only patience but also capital protection. A good trader focuses on protecting their money. A bad trader focuses on the profit, and hence why they over risk and over leverage and chase money, because they're focusing on the profit. Whereas a good trader will always focus on the initial investment that they've got in their trading account, and they'll do everything to protect that. I know regular visitors are very familiar with this. There are a few new guys on there. There's a few new names that I haven't recognized. So I'm just going to quickly break it down. What you can see in front of you is a typical chart setup of mine. Top left corner, I have my watch list. Now notice that it's a very extensive watch list. Aussie dollar at the top, all the way down to the South African rand, Japanese yen at the bottom. So it's an extensive watch list. Don't let that freak you out. Don't don't let that panic you. A lot of the times people just focus on a handful of currencies, maybe just the euro dollar, maybe just gold. A lot of times people have a favorite instrument they like to trade. It's not the correct way to approach. Remember, something should only be your favorite as long as it's paying you, and it will be paying you most heavily when it's in a trend. As soon as it starts going into a consolidation and it's going into range band activity, that's when you want to drop your attachment and you want to move to another instrument, maybe a stock or another currency that's already in trend. So that again is a key to a good trader. These are the things that you guys should be picking up from my webinar. What makes a good trader? A, patience. B, focus on capital protection. C, a large portfolio, an extensive portfolio. D, no attachment to any particular instrument. The attachment should only be as long as it's paying you. As soon as it stops paying you, move on. Okay. Now, having a good big watch list is important. Why? Because currencies move in groups. If you look at the recent trends that we had towards the end of last year and the beginning of this year, So from September through to May, we were trading currencies. Regular visitors, my webinars will know we were looking at things like the euro dollar, the Aussie dollar, the pound dollar, the dollar yen, anything that was correlated to the US dollar, they were all in trend. US dollar, Swedish krona. Then what happens is that those currencies go into consolidation. And then, say, for example, a lot of the currencies that were correlated to, I don't know, the pound Aussie dollar, pound Canadian dollar, pound New Zealand dollar, they started trending. So for the next few weeks, few months, they were the currencies that we were looking at. So just because I've got a big portfolio or a big watch list, don't let that freak you out. For weeks to months, I'm only looking at 4 or 5 currencies. When they drop, I move to another currency. Guys, can I get a quick yes in the chat box that you guys understand what I just said there? Yeah, thank you. Okay. Yeah. Okay, great. Okay. So have an eye on a bigger portfolio. Also, remember, there comes a time where the whole. Can you guys hear me? Someone said that I've lost sound again. Okay, yeah, you guys can hear me. Okay. Yeah, fine. Okay, so that's a local issue. Now, remember also what's really important is that sometimes the foreign exchange market can go dead. If the foreign exchange market as a whole goes dead, that means the money, the market makers, the big dogs, they've moved to another market. That's why you should never just focus on one market. Never just focus on FX. Have US stocks in there. Have commodities in there. Depending on which country you're in, maybe you trade the stocks within your country. That's also fine. Have an extensive portfolio. Move from market to market. Know where the trends are at any one time. And guys, this is where good software comes in. Good software will help you to engage in where these trends are, where the money is at any period of time. Okay, so having said that, you can see that we've got an extensive watch list. Top right corner, monthly chart, and this is where I have my major areas of support and resistance, and I have the high, the low, and the close of the previous year shown by the went colorblind for a second, the pink lines. Now, the high and the low of last year these are significant levels. Not only do they act as support and resistance, but they also tell us what kind of market conditions we're in the current climate. So what I mean by that is if I just open up the monthly chart, if price is trading below the low of last year, the lowest price of last year, 2014, it's a very good chance we're in a bear market. And you can see that price has weakened. If we are trading above the high of last year, there's a very good chance we're in a bull market. If price is trading within the pink lines, then there's a very good chance we're in a consolidation. So these levels are very significant because they tell us whether we're in a bull market or a bear market based on what happened last year. All right, and I have these displayed on the monthly chart, as well as already mentioned a proprietary tool which highlights major areas of support and resistance. Notice these are on the monthly chart. A lot of the times people have these on the lower time frames, 4 hour, 1 hour, a lot more noise, a lot more candlesticks, a lot more support and resistance. Okay, so I tend to have them on the monthly chart because it gives me the bigger areas, the much clearer indication of reversal points. Now also notice that these pivots, say, for example, the highest point here, the lowest point here, this point here, they're all associated to a round number. 1.10. The figure 1, which is a major figure, that's acting as a support and resistance, a resistance in this case. If you look at the lowest point here, 0.6. If you look at current place where price is currently struggling, is 0.7. If you look at the lowest point, 0.5. So you can see how round numbers, the distance between round numbers is 1,000 pips. So you can see how price reacts to round numbers. They make good target levels when price is in a trend, and also potentially where price can reverse. So it can give you levels where you may want to tighten your stops if price is around any round numbers. Okay, so the monthly chart is very important. Gives us a very clear indication. Also, if you look at the history of the chart, you can see whether it trends well. And we're looking at the Aussie dollar, US dollar, and we can see that it does trend very well. So future price action is kind of directed, if you like, by what's happened in the past. If it trended well in the past, we can assume that it's going to trend well in the future. If we look at another chart, let's say, for example, the CAD Swiss franc, and if I open up the monthly chart, you can see that it's very choppy. Guys, can you see that? Can I get a quick yes in the chat box compared to the Aussie dollar, US dollar? Can you see how this doesn't trend as well? Yeah. Okay. So looking at the monthly charts, if the monthly charts are very sort of wicky, you can see here we've got wicks, very long wicks on some of these candles. If they are very wicky, if trends are short-lived, if there's, if they're very choppy, that's the kind of chart that you don't want to get involved in. Even if it gives you an entry point based on whatever criteria that you have, the history of this particular chart will tell you that it doesn't trend very well. And if you do decide to take it, make sure that you reduce your risk. So say, for example, if you normally allocate 2%, reduce your risk 1%, 0.5%, because there is more chance of you getting stopped out based on the choppiness of the currency. Okay, so always look at the history of the chart to tell you what kind of ride you're potentially going to be involved in. Okay, if we go down to the weekly chart, excuse me, oh, just went crazy. If I just open up the weekly chart, right, we have the weekly 200 moving average, and that gives us the bias. So when price is above, it's in a bull market, and when price is below, it's in a bear market. Remember, this is logic that's from before the internet. This is institutional logic. This is not something that I've created. This is logic that's been in existence for decades. All the best traders and investors, Warren Buffett, your John W. Henrys, the turtle traders, everyone that has made significant amounts of money, they all use similar logic. The 200 moving average gives you a bias. So what that means is above the 200 moving average, we only want to go long, and below the 200 moving average, we want to go short. Now, in addition to that, I have a trend filter. So generally, you will see red and green candles. I don't have that. What I have is a trend filter that highlights trends. And you can see that this whole area is red despite pullbacks. And that is because I have a trend filter telling me that the overall trend is bearish. So what I'm looking for is the trend filter to be red below the 200 moving average and the trend filter to be green above the 200 moving average. If it's red above, I stand aside. If it's green below, I stand aside. And I have that exact same logic on the daily time frame. So if price is trading below the daily 200 moving average, bearish bias, above, bullish bias, above, I'm looking for the trend filter to be green, and below, I'm looking for the trend filter to remain red. So putting all three time frames together. Now notice, guys, I have three time frames. A lot of the times people have a single time frame, just the 1 hour. They may even say, for example, look at the daily time frame, but then go down to a 1 hour or 15-minute to enter and manage stops. It's not the best way to do it. I look at the monthly for support and resistance. I look at the weekly and the daily to look for trend direction, bias, and alignment. So in a bear market, I want to be below the weekly 200 and the daily 200 moving average, and I want the trend filter to be red on the weekly and red on the daily. That gives me a very strong bearish environment. Remember, we're playing on probabilities. Nothing's guaranteed. So by having something that tells you the bias and the trend are in alignment, you're in a very strong environment to be making money. And if you look at the weekly time frame, look how long it's remained bearish. We're looking at a long time. If I just open up my if I just bring up my cursor. Okay, and if I just move my cursor to where the bar turned red, we're looking back at September 2014. So a year and 2 months, the trend filter has remained red, telling us that we're in a bearish trend. On the daily time frame, we can see that it remained red, and then during a period of consolidation, we expect the trend filter to alternate between red and green. Then it broke out to the downside, went red, and now we're going through another area of consolidation, and so it's alternating between red and green. So if the trend filter is red on the weekly and green on the daily, you can see that the trend is out of sync, even if the bias is bearish on both. So what we're looking for is price to be bearish on the weekly, bearish on the daily, the trend filter to be bearish on the weekly, and the trend filter to be bearish on the daily. That is when we can start looking for shorting opportunities. And of course, if we reverse the logic, green above the daily 200 and green above the weekly 200. Okay, right, good question coming through. Thank you, which is the trend filter here. It's telling me, someone's asking, what does the trend filter mean? So basically, that's telling me how many bars it has remained red or green according to my trend filter. So you can see that on the monthly, it's remained red for 29 months. It's remained weekly 57, daily it's been green for 7, 60 on the 1 hour time frame, 11 on the 30, 31. The 60 and the 30, I just have it there for visual purposes. I don't really reference it. For me, it's just for monthly, weekly, and daily. Okay, so that's basically telling me how bearish any particular currency has been. Okay, so you can see the monthly's been bearish for 29 bars, 29 months, if I had the trend filter on there. Okay, I hope that answered your question. Would you consider the pound dollar a bad pair for trend trading? We will go through that right now. Okay. The answer is yes, and I'll break it down. Guys, can I just get a quick yes that you guys understand my page? You understand how it's set up. You understand the logic behind it. Once I get a quick yes from all of you guys, I'll then go in and start doing some in-depth analysis. Thank you, guys. Yeah. Okay. Lots of yeses coming through. Okay. Brilliant. Okay. If there are any questions, of course, just please ask. Okay. Right. Aussie dollar, US dollar. Uh, okay. The question is, how do you set it up in your system? Right, guys. It's a good question. A lot of these tools are proprietary tools. They're not tools that are readily available on the internet. They're not readily downloadable. Um, these are proprietary tools. If you want access to them, if you want to know more about the software, then please contact me via email. Okay. Um, Okay, we'll come back to that. Someone's asked, how have I back tested the system? Okay, we'll come to that kind of those kind of questions towards the end of the webinar. Tarmo, please make sure that you ask me that again at the end. Okay, let me just go through some analysis and we'll come back to that. Okay, Aussie dollar, US dollar. Start with the monthly time frame. Long-term trend, very much bearish. Price is currently struggling at the round number 0.70. However, as the long-term trend is bearish, we'd like to see price continue. If you look at the history, we can see that we have trend consolidation, breakout to the downside. Look at how the pink line of last year, so the pink line low of last year, you see how it acted as resistance? If I just open up the chart, you can see that it tried to break it, failed, tried to break it again, failed, and then we had a breakout to the downside in the direction of the long-term trend. We're now seeing a move against trend. And remember, that's expected. After every move, price generally corrects itself. And that is because price is also faced with the round number. So this is not a trend reversal. I know I've seen a few people on the internet talk about how price is in a reversal and they've called a reversal, etc., etc., etc. It's not a reversal until it's been confirmed. And the way it's confirmed as a reversal is when price breaks the 200 moving averages. This is not a reversal. This is simply a breather, a pullback, however you want to call it. And the bias is still in the direction of the trend, which is bearish. We want to see price move towards 0.6 and then 0.5. On the weekly time frame, price is still trading below the weekly 200 moving average. So we have a bearish bias. Trend filter is still red, suggesting a bearish trend. And if you see, we've had a move against trend. We had a move against trend here, short-lived continuation. Another move against trend. The chances are, whatever's happened in the past, there's a very good chance it's going to happen in the future. We need to see price break this pivot support, clear the round number 0.7, and then move towards 0.6. On I've got a message saying that the sound has gone. Can you guys hear me? Yep. Yep. Okay. That's weird. I'm not quite sure what that is. Yep. Okay. You guys can hear me. Okay. Right. So we're back. Okay. So the trend filter has changed from red to green. If I bring up my crosshairs, you can see there's a resistance level right here. Yeah, so there's a resistance zone. So we've got the low of this consolidation and we've got this pivot level here. So we've got a resistance zone. Price has come back to retest that resistance. So until price clears that resistance, clears the daily 200 moving average, and also the round number 0.80 and this resistance here, that for me, price is in a consolidation until it breaks the 200 moving average. Then the bias changes from bearish to bullish. But as a trend trader, the bias is still bearish. Price is still going for an area of consolidation. So what we need to see is a correction to the downside. Now, I had positions running on here, as you know. These positions now have been stopped out for no loss. All my positions were at break even. So the only thing that I've lost now is time. I've not lost any money. So my initial risk was very small. Again, this is all part and parcel of trading. This for me is not a trend. If we come, this recent move is not a trend. It threatened to be a trend, if you like, but has now gone into consolidation. Until it breaks out, either to the downside or to the upside, this is in an area of consolidation now. And I'll be standing aside until we get a good setup. That for me is the approach as a trend trader. Of course, range traders, they'll draw resistance here, they'll draw support here, they'll go short of resistance, long of support. If you look at the distance between support and resistance, there's hardly any space. If you compare that to the overall direction of the trend, a little bit of a consolidation is not how you're going to make consistent returns. Remember, you may make some money, but you'll also have losing trades and they kind of cancel out each other. So you'll go through all of that effort of trading ranges for very little return. Sorry, there's a question come through. You can draw a trend line through the bottoms on the monthly chart. Yeah, sure. Okay. Let me tell you about trend lines. I'm not massive on trend lines. I'm not massive on trend lines. I'm not massive on trend lines as a support level in a bear trend. Trend lines as a resistance are more relevant. So if we were to compress this, and if we were to draw a resistance, a trend line as resistance, that would be of more relevance to me as my personal approach, rather than to draw a trend line as support. Either way, this is stuck in consolidation. Will you re-enter? Yeah, Adi, when price breaks support, I will re-enter. At the moment, this is just in consolidation, okay? So if it breaks this support level here, this is when I will re-enter. If it starts breaking resistance and starts creating new highs, then I'll reassess the situation and I'll look for long opportunities. Okay, I hope that answers your questions on the trend line and the entry. Okay, let's move on. If we look at the Canadian dollar. All right, Canadian dollar, start with the monthly time frame. We can see that the long-term trend was bearish. Price was, if we just take it back, price was above 1.3 and above this resistance. And we can see so far this month, price has now come back below that and is now trading below 1.3. Of course, we need to see this month closed out before we can confirm that. We're only halfway through the month. This could totally reverse towards the end of the month. So we really need to see price close below this level for this to be confirmed as resistance. If we go to the weekly time frame, we can see, however, that the trend filter is still green. We've had pretty deep pullbacks in the past, so there's a good chance that we could see that. We're seeing indecision around 1.3. So this whole level here could be acting as a support level. Ideally, what we'd like to see now is a bounce to the upside, a break and a close above here, and a continuation of the trend. That's what we want to see, as the long-term trend is bullish. If we go to the daily time frame, price is trading above the daily 200 moving average. Above the daily 200 moving average, the trend filter has changed from green to red. Now, I do have a position running on here, and I'm still in this. I use quite wide stops. So this move against me has taken me into negative territory because of my stop loss. However, I haven't been stopped out. Now, remember, my risk on these positions is very small, generally between 1% and 2%. And then as price starts approaching my stop losses, I even tighten stop losses to reduce risk. So by the time I actually get stopped out of this, I probably won't lose more than between 1% and 2%. So I'll lose less than my initial allocation. At the moment, I'm still in this, okay? And I've allowed for a pretty good move against me. It's come back to support. We can see that here, this level now is acting as support where the crosshairs are, and around number 1.3. I'd like to see this level hold strong, a bounce back to the upside, a break and a close above this level, and then a continuation of the trend. And this is when I'll start looking to start compounding, adding further positions. If it starts breaking the 200 moving average, that's when the bias will change from from bullish to bearish, and that's when the bias will change. For now, my preference is still with the bulls. It just requires patience and for me to be standing aside. Okay, question come through. Let me just have a look at that. How does a trader know when an original trend starts, not a continuation? An original trend, okay, for me, that would just be a breakout or out of consolidation. Simple as that. Remember, price doesn't continuously create new highs. It will trend for several weeks, several months, and then after that, it will go through an area of consolidation. So a good example of that would be the euro dollar. Let's have a look at the euro dollar, okay? The euro dollar is something that I traded towards the end of last year, beginning of this year. And you can see a very good trend. It went from 1.4 and it's now finding consolidation around 1.10. Okay, that's expected. After every move, price, it consolidates, and it's a natural feature. What we now want is a breakout. As the long-term trend been bearish in the past, we favor a breakout to the downside. However, we need to look at the 200 moving averages to see what's going on. If we go to the weekly time frame, price is trading below the weekly 200 moving average, so we have a bearish bias. Trend filter is red, and it's been in a consolidation now for months. Very, very long time, several weeks, but the trend filter still remained red, so that's still telling us that the bias is bearish. However, if we go to the daily time frame, price is trading above the daily 200 moving average, so we have the bullish bias, and the trend filter is green, suggesting a bullish trend. So we've got everything out of alignment: bearish bias and red trend filter on the weekly, and bullish bias and bullish green trend filter on the daily. It's out of synchronization. So you can see why the euro dollar as a trend trader is not something that I'm particularly interested in trading. Going back to the question, which is when do you know a new trend is emerging? That is when price starts breaking out of consolidation. So if price breaks this high point and starts creating new highs, that's when we're in the emergence of a bull trend. If price breaks this support level here, and that's when we're in the emergence of a bear trend. So until it starts breaking out of this consolidation, we don't really know what kind of trend we're in. This is just going sideways, and it's very clearly going sideways. If I take price action back, look at that trend right there, 1.4 all the way down to 1.06 before finding consolidation. Okay, and if you look at the structure of the trend, this is where people panic. Price doesn't move in a straight line. Trend, consolidation. Then we went through a little bit of a sideways, but still heading down, pull back, a big move down. If you look at that move, that was in December. That's the time when most people think the markets are quiet. December, which is called the Santa Claus rally, we can see very good trend. Then we had a move against trend, beginning of the year, consolidation, then another breakout to the downside. And that's when price went through consolidation. So you really want to be going in the direction of the trend. I hope that answers your question, FX Boyke. Breakout out of consolidation is where we would expect the emergence of new trends. Okay. Right. Let's look at the pound dollar. I know someone asked about the pound dollar, so let's have a look at the pound dollar. Okay. So if we look at the pound dollar, I mean, it's pretty self-explanatory. First of all, it's going through a long-term area of consolidation. However, the consolidation is quite wide. 1.7 to 1.5, that's a 2,000 pip range consolidation. So within that consolidation, you could actually capture a trend. If the range of a consolidation is 500 pips, I probably wouldn't be interested. But the range of this consolidation is 2,000 pips. So if you look at that period there, I actually traded this period here and I made a bit of profit. Okay, but since then, price found support at 1.5. And it's stuck between the pink line levels of last year. So this is just stuck in an area of consolidation. So whoever asked this question earlier, I can't remember who asked it. Let's have a look. Whoever asked it, if you could just, yeah, Addy, thank you, Addy. Addy asked this question. You can see that price, and Addy did actually say he thinks it's stuck in a consolidation. And you're very correct, Addy. It is stuck in a long-term consolidation. Pink line levels here acting as resistance, and the 1.5 round number, which is a very strong level of support. So until it starts breaking out of this consolidation, we shouldn't be, I'm personally not interested in it. And that's as far as my analysis would go. That is why sometimes people ask me, how does my analysis, how do I trade for only 10 minutes, 15, 20 minutes a day? That is because I look at the bigger picture. I don't actually need to go down to the weekly and daily because the monthly is telling me this is stuck in consolidation. However, let's look at the weekly. Below the weekly 200 moving average, trend filter is green, so that is out of synchronization. And on daily, we're above the daily 200 moving average and the trend filter is green, so that's in sync. However, very much stuck in consolidation. It's very messy, very choppy. If we compare it to the trend before, we can see a neat downtrend. And then since then, just consolidation. Guys, can you actually see that? Can I get a quick yes that you guys can actually see the difference in structure there? There is a trend and there is a consolidation. Can you guys actually see that? Yeah? Okay, thanks. Yeah, okay, good. Lots of yeses coming through. Yeah, okay, fantastic. So, as traders, you guys really need to start adjusting your eyes to what makes a good trend and what's in consolidation. And remember, a good trend, by the way, guys, a good trend is one that has neat pullbacks. A good trend is not something that just shoots down. That doesn't exist. Remember, in trading, if something moves very quickly in one direction, it's very likely going to whipsaw against you. We don't want that. A good trend is one that's made up of neat pullbacks. And the advantages to pullbacks is that we can then compound, because every time it breaks out, we can compound. If it offers a good pullback entry, then you can compound on the pullback. But as it keeps breaking out of consolidation, we can start compounding. And that is how you then start seeing that exponential growth. Okay, pound dollar, not really something that we're interested in. Okay, I'm going to go to the New Zealand dollar as someone has asked about it. Okay, now monthly time frame, price is very much bearish. However, we can see a pretty deep correction to the upside so far this month. And if we actually look at it, it's happened before. So the fact that we've had a big pullback to the upside shouldn't really concern us because it has happened before. What we favor is a breakout to the downside, price to move towards 0.6, 0.5, 0.4. Those are the levels that I would like to see price move towards. If I open up the weekly time frame, price is trading below the weekly 200 moving average. Trend filter is still red despite this current pullback. If we look at the pullback here, pretty deep pullback and then a big drop down. So another pullback, what we'd like to see is a big drop back to the downside. On the daily time frame, price is trading below the daily 200 moving average. The trend filter, however, has changed from red to green. And again, I had several positions running all in good profit. These have been stopped out because we've had a pretty big correction to the upside. These positions have now been stopped out for a little bit of profit, so no loss made on these positions. I'm now looking for a correction to the downside, a break and a close below this level, and that is when I will start looking to re-enter into this and start looking for shorting opportunities. If it continues to create new highs, if it breaks the round number 0.7, if it breaks the daily 200 moving average and starts creating new highs, that is when I will start looking for buying opportunities. But in general, as you can see, all the currencies that we've looked at, they're all in a correction phase. They're either stuck in a range or they're in a pretty deep pullback, which could potentially now lead to new trends and new reversals. But until that's confirmed, i.e. 200 moving average is being broken, we don't want to be getting involved in this. Okay, guys, those are the currencies that I'm going to be looking at. Are there any questions? I've got about 5-10 minutes left. Okay. Okay. Something people always ask me, guys. I don't give out trade logs. So if someone asks me for my trade log and my results, I don't give out trade logs. The reason why I don't give out trade logs is because that will then mean me showing you how I've created my stops, how I manage my risk, how I compound, how I entry, how to exit. A lot of information goes into a trade log, and that kind of information is really for my clients and for our community members. So in terms of like sharing trade logs, etc., that's not something that I do. In terms of back testing, I've been trading since 2007. So I've been doing this for quite a long time now, coming up to 9 years, 10 years. I've got a lot of experience when it comes to trend trading. This is what I do as a living. Trading is my primary income. I'm a full-time trader. And I can tell you, okay, I can tell you that trend trading is really the way forward. You can go back and sort of look at trends yourself, look at the structures. So in terms of trade logs, etc., it's not something that I really do. Okay, I know a lot of people out there will share their trade logs. They have things like what is that website where people share their results? My FX book, is that what it's called? Um, yeah, I don't use that. Okay, so it's not something that I would share with you guys. Is your way also like investing? Investing, yeah, I invest in stocks. And it is similar. I mean, with stocks, I may look a little bit more into fundamentals. I have two different portfolios. I have a trading portfolio and I have an investing portfolio. So of course, I do use the same sort of approach, but I may also look at fundamentals when I'm actually buying actual physical stocks. Okay, so it's a slightly different approach. Can you tell us how many percent years of growth you expect using trend trading? Okay, that's a good question. I've never had a down year. I've never blown an account. I've had a mentor from the beginning, so my mentor gave me strategies that work. Again, if when it comes to sort of percentage results, I can't really sort of divulge exactly what I've got because I keep that private. But I can tell people that in your first year you can expect 20 to 30%. That is a realistic target. But remember, compounding until you sort of experience compounding and until you understand how it works, um, compounding is powerful, guys. Compounding is powerful. When you sort of understand, appreciate compounding, you can get far, far, far bigger returns than 20 to 30%. But that's what I tell people in their first year because they're learning, they're experiencing it. But some of my clients and community members, they've made a lot more. Do you? Okay. I can see questions coming through, so I'm trying to go through all of them. Okay. Do stocks trend better than Forex? Not necessarily. They have different characteristics. Stocks tend to be a little bit slower when you're in a bull market, but remember when they crash very quickly. So that's the nature of stocks. Slow growth in the up market, quick growth in a bear market, because obviously a bull market rises slower than a crash. So that's the feature of stocks. With foreign exchange, it's more cyclic because it's traded in pairs. So whether it's in a bull market or a bear market, the rate of growth can be the same because you're trading currencies in pairs. Okay, so it's just their characteristics are different as opposed to saying one trend's better than the other. You need to have both in your portfolio and then appreciate that they're both different, similar, but then also different in certain ways. My MA on the New Zealand dollar daily tops the green bar. Do you have an exponential or something? No, I use simple. I use simple moving averages across all. Whether I'm looking at the 200, the 50, the 21, all my moving averages tend to remain the simple. Okay, I mean, can you call your trading sort of investing as whole long term? Yeah, I mean, the longest I've held a trade is 13 months, I believe. One of them, like the euro dollar this year, was about 11 months. So I would say, it's medium to long term. It's not long term like people like Warren Buffett. Some of my investments I'll hold for years. Warren Buffett holds for years. So that's really long term investment. So this is more sort of medium to long term as opposed to short term. Okay. The way I would differentiate this, trading my trend trading portfolio, that is my bread and butter. That is my 9 to 5, if you like. That is what funds my lifestyle day to day. My investment portfolios are, that's my retirement fund. That's for my children. That's for my future generations. That's a much, much longer term, bigger portfolio. So, that's how I would differentiate the two. I hope that answers your question, guys. Um, yeah. Okay. Okay, great. So just change it to simple. I don't think there's much difference between simple and exponential in terms of where it is on the chart. But I just find that the simple works a little bit better. How long are you busy with trading a day? Okay, good question. Basically, I spend an hour at the weekend. So on Sunday, that's when I do my in-depth analysis. That takes about an hour. That's when I build my watch list for foreign exchange, stocks, commodities. That takes about an hour. And then during the day, Monday to Friday, anywhere from, I'd say, 1 minute to 10, 15, 20 minutes. So I never spend more than 20 minutes a day looking at my trades, looking at my charts. And, in the last few weeks, nothing's been happening. So my trading day to day has literally been a minute, 2 minutes. Remember, I'm looking at the monthly, the weekly, the daily. So I'm not a slave to my computer. I'm not a slave to intraday noise. Um, okay. Do you still wait till your stop loss is hit? Generally, yes. I wait until my stop loss is hit. I may tighten stops. So if price gets to a major level of support and resistance, then I may manually start tighten stops, but I never close positions based on fear. I don't just close a position manually. It's always mechanical. There's always a logic. So if my stop loss is say 1,000 pips away, I may then move it to 200 pips away based on a certain logic. Okay, so always have a logic to the way you do things. Don't just panic into making decisions based on emotion, based on what you're seeing intraday. Look at the bigger picture. Let that direct you. Okay. Any final questions, guys? Do you have stop entries, or you look at your computer at that time? I'm not quite sure what you mean by that, but I use entry orders most of the time. I don't generally use market orders. I think that's what you're asking. Most of my trades are based on entry orders. So, say for example, if the market closes at a certain level, my entry would be, if I want to go long, I would go 10 pips above the high of that bar. If I'm going short, maybe 10 or 20 pips below the low. So I always look at entry orders rather than a market order. Again, the advantage to an entry order is it removes that emotion. If you're using market order, it's kind of emotional. You're jumping in at that level. Whereas with an entry order, you're saying, okay, look, if you continue in the direction of the trend, take me in at that level. It just removes the emotion and brings a more mechanical approach. Everything you do in trading should be really mechanical, should be very robotic. Don't base it on an emotional element. Okay, try and remove emotions from your trading. Okay, guys, I think that's it. So with a wide stop, you can lay on the beach. Yeah, with a wide stop, remember, the way to look at it is this. A trend is a function of time. A trend is a function of time. If you look at a fashion trend is a minimum of 3 months. If you look at it seasonal, a fashion trend is 3 months. We want to have that same logic with trading. A trend is a function of time. So if you remove the time element by using tight stops, then you remove the trend. And if you remove the trend, you remove profit. So the reason why I have wide stops is that it allows price to move. But remember, I also use compounding. So don't think that just because I'm using wide stops, I'm compromising on profit. We're not compromising on profit because as soon as I start compounding, it starts accelerating the profit. Okay, so there's a real misconception about stops. Most people don't know how to use them. They think tight stops are better. It isn't. It's totally incorrect. What is the criteria programmed into the colored candles? Okay, that's proprietary. Diego, if you want to know more information, guys, about any of the software that you're seeing, just email me over. My email is zaheer@tdtpro.com. Do you guys have yes, I always add positions during trend. Exactly. Always add during trend. Do you guys have the PDF that I've been sending out to people? I think some of you on here have the PDF. If you do not have the PDF really is the guide. It's the complete guide to trading. If you do not have the PDF, please email me. Okay, email me after this webinar, and I will get the PDF over to you. Okay. Did you guys catch my email? Yeah, Zaheer at tdtpro.com. I'll just type that in again one more time, okay? The PDF's all about, it's the complete guide to trading. So it's all about technical analysis, candlesticks, moving averages, chart patterns, like everything that you guys need to know. It really sort of cuts through the nonsense. There's a lot of nonsense on the internet. There's a lot of bad information. There's some good information, but there's a lot of bad information, and the good information tends to get drowned out in the bad information. So the PDF is, I think it's about 60 pages. It really cuts through all of that, all of the sort of clutter on the internet, and really gives you the real nitty gritty and the nuts and bolts of what trading's about. Okay, so please email me as soon as we call time on that. Okay, I've just run over by a couple of minutes. I'm going to call time here. So thank you guys again for your time. Thank you for attending the webinar. No, it's not for beginners. It's for everyone. It's a complete guide. It's for everyone. Doesn't matter what level you're at. There'll be something in there. Remember, guys, there's no such thing as being a complete trader until you really are making consistent growth and consistent returns. Okay, so be open to the information in the PDF. Okay, thank you, guys. Have a great day. Have a great weekend. Great morning wherever you are. All the best, and stay in touch. Take care. See you soon, guys. Bye bye.